Hi everyone. Sending this out a little later this week because of the US Martin Luther King holiday, making for some pretty thin trading conditions. So I'll be staying out of the market today. But things really going to get started tomorrow. We've got earnings season getting underway from tomorrow, Tuesday. We already saw JP Morgan and Citibank's earnings last week, only really pushed up for them. And this week we'll see 40 of the S&P 500 companies reporting, 6 of which are the components of the Dow. And it'll be interesting to see really what happens because they've S&P 500 companies, their performances have beaten the analyst expectation in the past 2 quarters, but the bar is quite a bit higher this time. So if they actually repeat those performances, then they may report some earnings growth in Q4, and we'll see whether they can. Whether they what their guidance is for the future and whether they think any of this is sustainable or whether they're going to be really hampered by the latest round of restrictions and lockdowns and everything else globally. Something else that should bring a little bit more colour to the market is Biden's inauguration on the 20th. Okay, so that'll be on Wednesday, and really see what he's going to be about. I guess it does often seems to give a confidence back to the market when a new president arrives and lays things out how they see things going. He's due to enact apparently roughly a dozen executive actions on day one, which include things such as joining the Paris Climate Accords, extending the pause on federal student loan payments, halting evictions, foreclosures, all of that sort of thing. And one thing that's really caught the eye is his idea to extend or open, the pathway to citizenship for millions of undocumented immigrants. But that will have to go through Congress as well as his big stimulus package, $1.9 trillion. So we'll see how that works out for him. But it should be generally to see a bit of positivity after these kind of inaugurations. Let's see if that's the case this week. Okay, so let's have a look at the markets. I've got up here a chart of the dollar index, the Dixie, as you can see here. And really what we're looking at is, we saw this move down into this real kind of strong support area here. We've gone deep into this area, but it's been picked up in the past week. And the question now is whether we see more dollar strength going forwards. So really what I'll be looking at from a trading perspective is just level to level, see if we can get out of this lovely pinky purpley colour box, get out here, okay, and push on, get some acceptance and move on perhaps up to this area here where we saw this low. See if we can push on again up towards this low and even beyond that, perhaps up to this area, maybe even looking at this low over here. It sticks out a bit of a... Okay, it's already seen it push up there once, and that's really what kick-started this move. But that for me is really where I'd see things squeezing to the absolute maximum. I'd be surprised if it gets up there, and I'd be very surprised if it breaks up there as well. I think the longer-term dollar trend is obviously down now, and we'll see whether that can push up there. One thing that we could see is grab my attention over the weekend is the short position. We've got the highest since 2011. I've got noted down here. The largest short position since May 2011, up at 34 billion for the week ended January 12th, which was an increase of 4 billion from the prior week. Actually, no, 3.5 billion. Either way, there's a lot of components here for a short squeeze. And we also saw the Treasury elect, I guess you would call her, Janet Yellen, former boss of the Federal Reserve, coming out saying that she's prepared to make comments and make it clear that the US does not seek a weaker dollar for any kind of advantage. So again, there's a few components there that we want to see, see if this dollar move has any legs, or whether we're just going to come up here into this 92 area and just continue selling off. Really, it's all to play for there. Large part of this move down in the dollar index has obviously been caused by the euro selling off last week. Let's just flick across to the chart here. Okay, so we've got the daily chart up there. Let's bring that over a little bit. So obviously we've seen this move up here into 123,500. Actually, I think I'm just going to mark that on while we're here. Okay, up to this high. So really, yeah, as we pushed into 123,500, that was rich enough, and we've been buying dollars ever since. So how much further can we see this move going? I think we could see it definitely extending down into this 120, 114 area. We're just sitting here at this sort of the last low really that we saw before we really pushed up from the 120s right up to 123,500. Break there, move down obviously into this level here, which is obviously the extreme of the prior range before we broke out. And we may also see a move down, I think, into 119,201. However, I can't really see this lasting. And for all of the political risks that we have with the euro that we saw coming in last week, with Italy's government losing the majority and the Austrian government resigning over I think it was a childcare subsidy scandal. We've seen harsher lockdowns and restrictions as well that are sort of being extended until March. I think is the general. Well, even Easter really. I think I saw Merkel saying it was probably going to be until April under the great German headline of the mega lockdown that they were talking about. So really, all about the dollar more than anything else. I think we'll see that move down into here, but then probably see some more dollar selling come in and potentially see, the gradual move and the gradual stepping up back up towards these highs again, and probably push on beyond there. But obviously, lots can happen in the markets, so I can't take any of that for granted. One other chart that I really am. Well, there's two more charts actually I want to share with you here today. Okay, this one I really like. This is dollar yen. Okay, I've just made a note here of this little daily double top over here at 104.76. Now, I really do fancy a bit of a push out here. If we see there's actually a bit of a precedent over here with this area. This is what I'm looking at. So if we've got this nice clean channel down here, obviously pretty much all of the price, especially the upside, has been contained in that. Downside we pushed out a little bit further, but then we kind of got back within this range and we see it holding down here again. So could we see a sort of another fake breakout from this channel? Maybe just grab the liquidity up here and then continue lower. That's really what I'll be watching out for. But again, just in a broad-based dollar downtrend, I don't really see it breaking too far from here. One last one that I like the look of, back looking here at gold, nice and clean. So what we've seen with gold, obviously we saw it push up into these highs. We've seen it come down again, just in this range, and we've broken below it, tried to push higher, just failed shy of that, and now we're back below that level there again. So we've seen it, this level be really key. Obviously support all the way along here, broke below it, tried to get above it. We found support again, but then that breakout up and above couldn't be sustained, and we're seeing that we're here below this. Now, the question obviously is whether or not we can head back down, head lower, or if we're going to push back above this level again and maybe push on. I think much of that will depend on what happens with the yields when the US markets open tomorrow, and for the rest of the week. Also, just sort of worth being aware of, central bank meetings this week. There's quite a few of them, but no one's really expecting any changes at all, to be honest. The major ones, we've got the ECB, Bank of Canada, nothing really expected there. So the focus will much be on the comments that they make and the context that they try and apply to the current situation, what they're watching, what they're thinking about. Really probably trying to read too much into it, I think, is quite a risk when we're into analysing, probably is the better word, analysing these bank reports and the minutes of their meetings. So the Japan also have their decision. I mean, they've pretty much been on hold forever. They've got a policy review coming up, but that's not due until March, so no real change expected until then. In the sort of less sort of well followed central bank space, we've got Turkey as well. You never really know what they're going to do. They've already hiked quite a bit, and Erdogan's been out talking. They're talking about the sort of he's not keen on rates continue to rise, but he also has delegated some of that to the new central bank governor. So probably going to see it on hold there as well as in Norway and South Africa, to be honest. UK inflation numbers will also be out on at the end of the week, along with the PMIs for everywhere across the world, to be honest, between services and manufacturing is really going to be the focus. That gap, seeing the difference between the services and manufacturing PMIs. Obviously, manufacturing's held up really quite well. Services gets hit disproportionately by the lockdowns. But the data still doesn't really matter. It's all a case of putting it into context, and I think this week will be pretty important for doing that, especially with the incoming administration in the US providing some clarity.